Welcome to the MBA department of Swami Vivekananda Group of Institutes. Today we are in the second part of our discussion about the rise and fall of the king of Indian modern retail Kishore Biyani. Reliance Retail Ventures Limited (RRVL), subsidiary of Reliance Industries Limited, will acquire the retail and wholesale business and the logistics and warehousing business from the Future Group as going concerns on a slump sale basis for lump sum aggregate consideration of 24,713 crore rupees, the company said in a statement. While Reliance will take over Future Consumer Limited, which sells food, home and personal care products, Future Group's financial and insurance business is not part of the deal. The oil-to-chemical conglomerate's retail venture is India's largest offline retail company. Despite its recent online rollout, the company is keen to expand its offline presence. Future is a good fit in Reliance's retail that helps to expand its offline retail presence and would see further improvement in margins due to improving scale. While Ambani's firm has bought out all of the promoter stake in Future Retail and Future Lifestyle Fashions, the two firms that hold the Future Group business, it was not immediately clear what happens to Amazon's holding in the future. Future Group said it sell by way of a slump sale the retail and wholesale business that includes key formats such as Big Bazaar, FBB, Food Hall, Easyday, Nilgiris, Central and Brand Factory to Reliance Retail and Fashion Lifestyle Limited (RRFLL), a wholly owned subsidiary of Reliance Retail Ventures Limited. With these insights about the deal under discussion, let us now check out the story of the king of modern retail Kishore Biyani, a graduate from HR College in Mumbai, and hailing from a business family that was originally from Rajasthan. Biyani started his entrepreneurial journey by making ready-made trousers in the late 1980s, but his retail journey only started in the late 1990s when he set up a pantaloons store and a Big Bazaar in Calcutta. Biyani's idea was to rely heavily on white label that were produced under Future Consumer Enterprises, sell it at the best and competitive prices along with stocking bigger brand products from HUL and ITC. He believed his private labels would offer him the highest value proposition and at the same time protect his margins, further helping him generate huge revenue and profits. He brought in more formats and labels: Pantaloons, Big Bazaar, Food Bazaar and Central. At the same time, competition was coming in several ways. There was a lot of buzz around Shoppers Stop, the department store started by the Rahaya Group, or RPG Retail, or even the Tata Group's foray into retail. Later, even more deep-pocketed rivals entered the scene such as Aditya Birla Group, Reliance Retail and Bharti Walmart. To stay ahead of the pack, Biyani started borrowing. While he still continued growing after that, some of his deep-pocketed rivals had grown even faster. In late 2009, Biyani was forced to restructure the group by de-merging the non-retail assets. He focused only on 4 formats rather than 24. The retained ones were Pantaloons, Central, Big Bazaar and Food Bazaar. But the debt problem refused to go away. In April 2012, the debt for the core retail business soared to 5,800 crore rupees and the net debt-equity ratio at 1.8x. The debt was nearly 55% of the FY12 EBITDA. The same year, he sold off his first success, Pantaloons, to the Aditya Birla Group for 1,600 crore rupees. Even as he was caught up to clean the debt pile, including a futile attempt to divest the insurance business to L&T, Consumer was moving on to online shopping. Biyani was head-on challenged by wide-spreading network of Amazon Retail, Amazon Pantry and the capital boost received by Flipkart after Walmart purchased a stake in Flipkart. Though the Biyani family attempted e-commerce through Big Bazaar Direct, that did not go a long way. Meanwhile, the likes of Tata Star Bazaar, Reliance Retail had grown their own franchises that further ate into Future Consumer's brick-and-mortar pie. All of this culminated to a point Reliance Industries found an able target in Future Consumer, that now puts RIL Retail Saga in a direct head-on with Amazon in India. By March 2020, it was clear that Biyani was struggling to keep his business afloat. Future Retail was downgraded, debt had piled up even more, and the entrepreneur's net worth, according to Forbes India, had fallen to $400 million, from about $1.7 billion just a year ago. While he and his family held 33.5% stake in Future Group, nearly all of it was pledged to lenders. It didn't help that from the end of March, the country went into a lockdown post the COVID-19 disruption. Even though outlets selling essentials could be opened, consumers preferred their neighborhood shops, or opted for online players. Big bazaar outlets were mostly located in malls, which opened much later, and continue to struggle to get footfalls. The impact was telling on the company's stock, which plummeted by over 80% in a matter of 4 months. Not surprisingly, Bayani mandated an investment bank for a stake sale. The search for an investor eventually led him to the entrepreneur who had already overtaken him to be the new retail king. That's all for today. Hope you have liked this content of the MBA department of Swami Vivekananda Group of Institutes. We will be coming back soon with some more interesting content. Stay home, stay safe. Do not forget to visit www.svist.org to watch more video contents on various subjects.